If you've been trying to trade the dead cat bounce strategy and you want some tips on how to do so, or you just want to learn about a brand new strategy that you've never heard about, this is the best video for you. We have two really good examples that just happened a few days ago of the dead cat bounce, and we're going to break down how to find the right stocks to trade, because obviously, as you know, not all sell-offs are equal. So we're going to kind of determine and distinguish what makes a good bounce versus a bad bounce. And number two, how to plan and trade this effectively and repeatably. Because at the end of the day, any trading system has to be repeatable. So we're going to have strict rules to follow and strict guidelines as far as entries and exit targets. So if you enjoy content like this, do me a favor, give me a thumbs up and hit the subscribe button for future videos. But with that being said, let's jump into the lesson. So if you're brand new to my channel, welcome. My name is Tony. I've been trading small cap stocks for about a decade now. I know it's kind of crazy to think about. And I have seen my fair share of stocks, and I've implemented so many different systems, and I've tried so many different things, and I've been able to kind of figure out and decipher this story of how stocks move. That's how I kind of talk about my lessons, right? It's all about the story of price action. So if you're not familiar with my style, you might want to watch other videos after this one, right? Because we're going to talk about some very key topics about front side and back side and just understanding overall trend. And if at any point you have any questions, please feel free to drop a comment down below and I'll be happy to answer as best as I can in the comments or in the future video. When I talk about a dead cat bounce or just a backside bounce, it basically is just whenever you have a stock that has a very strong front side move, that is almost like a supernova in some sense. And then after that first red day, or on that first red day, when that momentum snaps, it's going to have a big sell-off down. It's going to bounce off some key level from the historical chart. And then it's going to have a bounce into previous support as new resistance. And this bounce usually goes about 30% on most supernovas. But if it's a supernova that has amazing range, it could go up to 100% gain intraday. And so, number one, most important thing about this strategy is that not all sell-offs are equal. It has to be on a stock that's very extended and also has a significant previous resistance it can bounce off of. And so right here is the first example on MLGO. If you look at MLGO and we're looking at the hourly line chart just to make things easy to see, you can kind of see that there was a pretty clear resistance near this 1730s area, right? There was many points that held as resistance as the stock made higher lows. And then all of a sudden it broke out, right? In a big way, gapped up and ran. I mean, this looks small, but this ran from 17 to 27. Big breakout. And it never really retested that previous resistance area. It just kind of gapped up and ran. And then it ran even further the next day, gapped up even higher, all the way to $30 per share. So notice how after this breakout, it went from 17s to 32, about 83%, right? That's a very extended move. And once again, it never really retested that previous resistance. So then on this first red day, when the momentum just got slammed on down, right? I mean, just look at that candle. Everyone sold it. The momentum was ruined on this setup. So when this happens, right, there's a few key things to look at whenever you consider, is this going to be a dead cat bounce? Look at where the previous resistance levels are on the hourly chart. If they are both broken and also VWAP is going to be high open on that day, that's going to give the sensation of anyone that bought on this morning, mostly longs, are trapped. And so the momentum is just ruined in this case. And the further it sells off down and the faster it sells off down, the more likely it is to go into backside. With this big shift in momentum, we can see that it's now, I mean, this stock is no longer bullish. It's no longer holding previous resistance as new support. It's below VWAP. It's below all of the bag holders. So now, if it does continue to sell off in a big way, it doesn't have to, but if it has that extended panic sell, you can look for the dead cat bounce, where all you're looking for, right? All you're looking for is, does this stock have a clear level to dip by? As we established, there's this very clear level at 1735. And so if we see the stock pull back down there in a rapid fashion and starts to hold support, it makes sense it's going to bounce off there because it's a significant level. Now, as far as planning the dead cat bounce, it always happens in the same way. One of the most important rules with a dead cat bounce is you have to understand that it's just a dead cat bounce. It's not going to continue. It's not going to squeeze to new highs. It's very, very, very rare. Most of them, I would say 95 out of 100, do not continue. So don't base your trade off of the possibility that they can continue. So for the planning process, we know that our entry price is going to be that obvious previous level. So in this case, our entry is going to be 1735. Our max loss is always going to be the next obvious support lower. In this case, you can just kind of see it's right near 14 bucks. I have a VWAP that's automatically drawn from TOS, but this is kind of the max loss. And the target's always going to be a mixture of two key areas. Number one, just that kind of previous support area before the breakdown happened. So you can kind of see here on the day before it broke down, if you look at the line chart, it makes it a bit easier. There's a lot of support here near 24 bucks. It's also where the daily 200 moving average is. And what tends to happen is because, the first criteria was that VWAP is going to be a high open on that breakdown day. By the time the sell-off happens and then the bounce happens, you will usually see, if I move the chart forward a bit, that VWAP, by the time it's retest, will be around that same area too. And so this is the dead cat bounce, right? You're just buying off of that previous resistance as new support and then just selling it once it tests VWAP, once it tests that previous support area. And this was a nice, from 1730s, 1740s to 24 bucks, nice $6.50 per share gain, about 36%. And it's all intraday. And as you can see, if we move the price action forward, it died and it did not continue. So you don't want to hold and hope that it can go further. Just have one entry, one exit, and that's it, because it's a dead cat bounce. And so here's the second example of a similar stock, not as long of a development, but same kind of idea. First off, as far as stock selection goes, you want to have a stock that breaks out over a significant level, mainly on like the hourly chart, really. This is more of a multi-day setup. You're not going to have a dead cat bounce on the first green day move. Notice how back here we had this big obvious resistance near like $5, right? 480s, $5. And once it broke out, it just kind of ran. Like it never retested whatsoever, right? And so this thing ran from 480s as high as $8.40 per share. That's like 100% gain once again, right? Same exact thing as MLGO. It kind of ran 100% before selling off. And so once this started to sell off, notice how this was the next morning. VWAP is pretty high up and it just looks like it just has ruined its momentum. I mean, technically, as far as the trend goes, if this wanted to remain bullish on this squeeze, it probably should have held this kind of area at 720s, right? Because if it did that, held it and continued, it looks, bullish still. But this slammed off down below it, made this big failed breakout, and even you see this nice little bounce and rejection. I know I'm not too zoomed in, but I just want to kind of show the overall picture. And so this was the sign of a big sell-off coming up. And then, of course, when the sell-off happened, number one, understand that it is a backside bounce because it's, the momentum is just ruined. Look how fast this drop is. And then so if you're going to trade the backside bounce, just look for, is there any previous level that we could buy the dip off of? And once again, you can see right here, $5. And as you see, it bounced off there pretty much perfectly. It tested 40s pretty much perfectly. And we do the same exact thing. So we know that our entry price is 480s. Our max loss is next support lower, which is down near 380. So risking about $1 per share. And then the first target is going to be that previous support. Here you can see it's around 650, this kind of area here. There is some support from after hours. There is support from pre-market. And if we have our target at 650, that's a risk of about $1 per share for a gain of about $2 per share. That's a great risk reward, right? 2R is amazing. And notice how same exact thing happened. It sold off, bounced off that area, and by the time it bounced up, look what happened. VWAP was right around that same 650s mark. So making for a perfect area to find resistance. And as you can see, it did not continue. So you don't want to hold and hope that it can continue. Just take it for that one entry, that one exit, and move on. Don't hold and hope for it. And as you can see, we had another bounce, but it just rejected that same area. And once again, is dying off. Volume is plummeting. This is probably going to gap down very, very, very soon. So once again, another very clean example of the dead cat bounce or the backside bounce, whatever you want to call it. Now to wrap things up, let's look at an example of a stock that was not a good candidate for the dead cat bounce. This is RSLS. So this, don't get me wrong, this was a really nice front side move, but notice, I have my levels drawn off here already, it never really got super extended prior to pulling back. Every level that was broken out was adequately retest, right? This level here at $1, broke out, retest. This level here near 130s, broke out and retest. And then this level here near 220s, if you look at the line chart, was broken out and was retested. Yes, this went into backside because technically, if it wanted to remain bullish, it should have held 260s previous resistance as new support. But obviously, as you can see, it didn't. And this thing dropped like a freaking rock. I mean, it breached every level before market open. So one thing I do want to add too is dead cat bounces happen during market hours, not in pre-market, because you need to have that extra liquidity and volatility alongside it. RSLS just dropped purely in pre-market, and it's not a good candidate because it has already retested all these levels once before, right? QSG and MLGO, they were good candidates because they never retest those key levels. And as you can see, by the time market open happened, this was below all of its previous day resistance. And there's just no reason to touch this, right? Not all selloffs are equal. Some stocks just dump like rocks and they don't bounce at all. And so don't assume that everything is gonna have a dead cat bounce. That's a very, very dangerous mindset to have. And that's pretty much the setup. You know, as far as dead cat bounces go, they're not my favorite because I'm really more of a front side trader. I like to get into stocks that have technically unlimited potential. However, there are some times when there is enough range involved that a dead cat bounce does make sense. One of my favorite ones was years ago now, but on DWAC, DWAC, or now, which was the Truth Social SPAC. That one had an insane dead cat bounce. I'll try to find a picture, but it might be hard. Where it bounced from I think it was $60 to $130 intraday. So 100% gain. And that was a favorable dead cat bounce for me because obviously the range was so big and it had insane liquidity. So not my favorite setup, but might be something that you might be able to vibe with. And if not, at least you can better understand when a stock is in backside because then you know not to trade it further. And that's always a plus too. So let me know what you think about this strategy. Let me know if you've traded this before, if you've seen it before and it kind of makes more sense now. Like I said, be sure to watch my other videos because I have so much trading content on my YouTube that I break down exactly how to read stocks, how to read the chart, and understand why stocks are actually moving. If you want to trade with me, I have a free 2-week trial for TradeBuddy. That's my community that I run. We have a course. I do webinars every single day, both in pre-market and after hours to recap the day and kind of explain what my thought process is. So check it out. There's a free 2-week trial down below, and I can guarantee you that you're not going to be disappointed with the content that you'll learn in there.